Okay, good afternoon and welcome everybody, guys. As always, welcome to this session. This is the New York Stock Exchange Open. We're going to be trading live together. However, this is going to be a special broadcast because we are going to be covering some really important things over the next couple minutes. Obviously, just looking at the chats and just welcome to every single one of you guys. Tamelo, Peter from Bake, Mackenzie, Lise, welcome guys to the G360 TV family, guys. We are going to be having a ton of fun over the next little bit, but most importantly, and I get this question a lot regarding the recession, regarding the data that we talk about. We've covered this a couple of weeks ago in terms of a special broadcast. We looked at specifically what had happened over the past couple recessions and what that meant for the markets. Now we're going to spend the first couple minutes together covering that, going through the data so that you can better understand why I'm looking for certain positions and why I'm using the past 20, 30 years to look at what we're going through right now. And more importantly than that, this specific moment in time and why it is so special and why we have so much opportunity that we should be taking advantage of. Now, it's a very unique time and place to be alive, to be a trader, to see these markets move. And we obviously want to capitalize on that. But as with everything, as I've explained in past sessions, it's when preparation meets opportunity. When these two things come together, we see absolutely amazing things. So just looking at the chat, Keegan, heavily defended, welcome, greetings, Kudwano. Guys, thank you for joining the chat, and thank you as always for keeping the chat so alive. Live sessions for me are about this chat. Gilbert, what is happening all the way from Pretoria? The chat is what it's all about. And as I've said in past shows, and as I've obviously told you guys previously, G360 TV is about every single one of you, right? You make this channel what it is, and we do this for every single one of you. Being a trader first and foremost at heart, this is what I love to do, and to share and to collaborate with you guys on this level. Man, you guys fill my heart and make me super, super happy. So if you're feeling the love, as always, make sure you like and subscribe. There's somebody out there right now that is waiting for this particular broadcast. It's going to be extremely powerful. So if you've got somebody out there that you know is fearful, has doubts about what is coming, and you know it's coming, you can see it, you can see the signs, you can see the data, somebody that would like to better understand what is happening in the world, in the markets right now, then please go ahead and share this link with somebody you know that could find value in the things that we're going to be talking about today. Okay, so we do have a timeline down below. We're going to try to stick to structure. Most importantly, in the next 5 or 6 minutes, we're going to cover what has happened in the past recessions and what we've seen happen in the world and how do we essentially deal with that. Thank you for subscribing. Sherman BDW, welcome to the channel. Thank you for subscribing. You'll receive all new future uploads as well as updates. Okay, so in terms of what we're in for today and what we're going to be discussing, we're going to be really focusing on past interest rates, past recessions, and what does that mean for the world, right? I've shared with you guys that, Michael Burry from The Big Short, as well as many other great minds, have said something massive is coming. How do we look at that data and how do we deal with it? How do we interpret it? That is the big question. That's what I'd like to go with you guys through today. Now, I've spent a lot of time on this particular subject and this matter, but if you have any thoughts, any comments, any feedback, whether it be in this live session or after the fact, you're welcome to leave that in the comment section, and I do reply to as many of these comments as I personally can. So beautiful. Solomon, welcome family. Gilbert, Duano, Keegan, guys, you guys are amazing. Let's jump straight into it without further ado. Let's have a look at what we're getting into today. So prior to the New York Stock Exchange opening up, we obviously know that there's been a ton of data in the past. And what we're looking at this afternoon is we're looking at, past interest rate announcements, right? So we're looking at what's previously happened in the world. And, when we see interest rate announcements, what does this mean, right? So we understand that Federal Reserves raise the interest rate to curb inflation. That is the main mechanism in terms of what it's there for. Now, I want to go back 35 years, and I want to show you the correlation between raising interest rates, the stock market, as well as the dollar. So we're going to start all the way back at 1986, 1987, the first essential collapse that we saw. And we're talking about the 1987 Black Monday that happened in the markets, right? That was 1987. There's been a few of them, but that's where we're going to start our journey together today. And what I'd like you to see, and because the S&P 500 has been around for so long, we have really good data that we can rely on. So here we see that Black Monday 1987 and the stock markets crash, right? Again, it was widespread, people panicking. Everyone could see there's something wrong, similar to what we're seeing now. However, the world wasn't as connected as we are today. We need to take that in consideration. However, widespread fear, unemployment, it was chaos, right? We've seen this in the past. And we started in 1987, and we can see that once the crash happened, right, the Federal Reserve started to raise the interest rates, right? Once that interest rate process started, we can see how the S&P 500, right, which is very similar to your Dow Jones, which is the US 30, as well as your Nasdaq, as well as German 30, these indices of combined stocks, right? The S&P 500 gives us the greatest average across the board. Obviously, Nasdaq focuses on technology, so on and so forth. So you obviously have to pay attention to that, but the general idea is the same. We see the trends across the board, right? We see the Federal Reserve raising interest rates to curb inflation. And what ends up happening here is we see a decline on the dollar. This little blue line down below is the dollar index. So for those of you hearing about the dollar index for the first time, the dollar index is an index of the dollar weighted against other major currencies, most prominently, most heavily weighted against the euro, the pound, and the yen. The pound and the yen tend to swap around ratings from time to time, but it looks at the dollar's performance against these other assets, which is a general indicator of how the dollar is doing across the board and across different markets. So that level down below is the dollar index. Over here on above, we have the S&P 500. And I've done a further study, which we're going to link into a little bit later in the next week, where I'm bringing crypto in terms of the most recent data we have over the past couple of years from crypto. But what you need to understand, the fundamental data here, is that when interest rates are increased, stock markets perform well and the dollar tends to suffer, right? Oppositely and sort of inversely, when interest rates are dropped, stock markets tend not to perform, right? And in this particular case, right, we see that just temporarily the dollar performs well when we drop interest rates. The reason being, interest rates are dropped. We see that credit is easier to come by, more spending, more economic activity takes place. So dropping interest rates essentially helps the dollar perform and ultimately creates more spending, more economic activity. You would assume that has an immediate impact on the stock markets because people are consuming more. Amazon, Apple, Microsoft, so on and so forth, and you would expect that correlation to be one-to-one, but it isn't, right? Now, moving on, and this is obviously past data, and we can see how these things are inversely correlated, right? I want to move a little bit closer into the current space that we're in, and I want to show you guys the dot-com bubble, right? So we look at the 2000s, right? The whole world was worried about this technology bubble that was essentially going to burst. And we see that at the point of dropping these interest rates, we start to then see, what ends up happening with the stock market. Stock markets start to rally, and then we see, and I think I've deleted my dollar index there quickly. Let's just have a look there. Yeah, deleted my dollar index, but ultimately we see that the dollar lost value. As the dollar starts rising in value, stock markets fall. When we start to see that interest rate bottom, right, the bottom end of those interest rates, we then see the stock market starts to perform and we get some sort of normality. So rising of interest rates have generally had a correlation with stock markets performing super well. 2007, 2008 housing crisis, we see that interest rates were dropped to help the market in terms of a recovery. At this point in time, dropping of the interest rates, stock market fell, and we generally see that the dollar raised or rised in value, right? Interest rate bottom, so the absolute bottom of those interest rates, you can go ahead and have a look at it in terms of these numbers here. When we see an interest rate bottom, as an example, end of 2008, right? We then see that is the turning point for when the stock markets start to take off towards the top side. And every single time after that, every time we have raised interest rates, or we've seen the Fed raise interest rates, we see the stock markets performed well and the dollar tends to fall off to the side, right? So we see the dollar underperform, stock markets perform well. However, and looking at the most recent events in terms of the pandemic, we see that when the pandemic hit, stock markets took an immediate hit, right? Interest rates were dropped. We had an interest rate bottom. And this recovery or this recession, right? We need to understand, even though, and this is basically looking at things on a weekly time frame, even though the pandemic had a very short-term hit on the stock markets fell, people panicked. It didn't take very long. If we look at the data and we're looking at a weekly time frame here, it took the stock markets 8 to 12 weeks to recover back to pre-pandemic, pre-lockdown levels, right? Stock markets recovered almost immediately, and that was at the interest rate bottom. Then we started to see the stock markets immediately. The rest of the world was still in lockdown. The dollar was suffering, and stock markets performed extremely well. Now, for the first time almost in history, right, we're in a position where we're starting to see, I just want to see if I can quickly add the dollar index again. There we go. Now, for the first time in history, we're able to see, and the dollar index has just changed colors over here really quickly, but ultimately we can see here that at the point of the stock market raising interest rates, the Fed raising interest rates, the dollar is doing extremely well and the stock market is taking an absolute beating, right? Now, if we go back throughout history, right, we can't find other examples of where these correlations ran in a similar manner, right? If we look at all past recessions, when interest rates were dropped, the dollar performed, slightly better because it created more economic activity. But the second those interest rates were raised, we then see stock markets perform well and the dollar not perform well. So we are in a completely unique situation. This is why when we look at the Fed raising interest rates, right, and if you look at it like that, you can see almost exactly how opposite the correlations. The dollar is shooting through the sky and we see that stock markets are falling to the downside. So when we talk about, long-term optimistics or long-term, what can we potentially see end up happening from these raised interest rates, this is where I have that opinion that stock markets need to recover, that Wall Street will recover. And we're seeing something unlike we've ever seen before. Recessions are normal. Recessions are corrections. Recessions are part of growth. However, what we're seeing here is not a recession. What we're seeing here is unlike anything else we've seen before from a data perspective. So in the last week where we were looking at, the US 30 as an example, breaking that 16th, 17th June resistance, which was one support, but the 16th, 17th June low, we're looking at that from the perspective that in the past, this is what the data has shown us. Now, could we be seeing a massive bear trap? Very, very likely so. This is my opinion, right? That we're seeing a bear trap and ultimately markets need to come back to equilibrium. Markets, and if you have a look at the past, no matter how far back you go, trends repeat, right? Trends repeat themselves. If those of you who follow Ray Dalio or any really famous investor that has done well through pandemics, one of the biggest tips that you'll hear is that things repeat themselves. It's just about going back, looking, spotting, and learning from them. Okay, so that is the main thing that I want everybody to understand. So I get a lot of questions, people saying, how, why am I looking for these bull moves on the stock market when very clearly, we see the stock market falling? I'm not buying actively into the indexes, but I'm waiting for those signs of that recovery towards the top side. So moving on, we obviously want to jump into some live trading. So if you guys are learning from this information, please let me know, drop that into the comments. But I just want to quickly point out that I was speaking this morning about the potential for that dollar weakness and ultimately to see certain recoveries across the board. At the moment, we can see gold is definitely looking like it wants to make that recovery. And I tend to look at gold, right, from the perspective of this is a safe haven item. So when we see gold start to recover back to normal levels, that is generally the first thing that I'm looking for to see a market back into balance. Again, the dollar is doing extremely well, too well in actual fact. It's doing too well for what we're seeing from a data perspective. Now, also keep in mind, we do have at 4 o'clock some data coming out in terms of those housing stats that we were obviously talking about, that we do want to pay attention to for this afternoon. We have those pending home sales, and that I believe could potentially give us that difference in terms of, are we going to see that weaker dollar? But moving really quickly into what we are paying attention to this afternoon, and that is going to be the US 30 as well as Nasdaq. And we're looking at this on a much smaller time frame. So we're looking at this and observing it from a minute time frame. And again, we are looking again for that recovery. We might not see it specifically today, but we are paying attention and obviously making sure if we see that recovery that we do not miss it to the top side. Okay, so let's prepare our charts really quickly. So what I tend to do and like to do, as you guys all know, is essentially have only 3 charts available for us to essentially watch and or monitor. So we're looking at US 30, that's behind me here on the left hand side. I will shift my face real quickly. Let's do that. There we go. And let's just get that out of the way. There we go. Beautiful. So I believe everybody can see US 30. So what we're going to do is we're going to prepare, and we can very clearly see that US 30 is at this moment in time in some sort of little bull structure. And we want to pay attention to that structure because this could be a hint as to where US 30 may be wanting to go. And we're simply just going to watch this. Again, a break to the downside, we will look for sells. Ultimately, a nice big spike to the top side, we will look for buys. Now, we are already 2 minutes in the New York Stock Exchange open. So we are going to just pay attention as well really quickly to some of the other assets and commodities that are busy moving. And we can see that in the center here, we have Nasdaq. Nasdaq is currently also sitting what looks like very, very close to support. Even if I really go, and I don't like market structure like this because I'm essentially forcing levels to work here. But ultimately, Nasdaq has been in that bull move pretty much since 12 o'clock this afternoon, popping towards the top side. Now, it's also important to note that for any long-term buy positions, we want to be cognizant of that level there. But again, this afternoon, should we see breaks to the downside, we may very well chase that. It's very, very possible we may go and have a look at that. German 30 finally here on the far right-hand side. Let's open her up and let's just see what sort of structure we're being presented with. Okay, so there is that structure that lays over there, and we do have, this little channel that we obviously have to pay attention to. And, we're pretty much at this point, I think, going to look potentially, I would like to see a north side move. So I'd like to see buy moves, obviously. But at the moment, we're seeing those sell pops over there. And so this is where we would obviously look for those breaks. We're seeing those breaks. And that is where we would then obviously start to look at going into and jumping into, obviously chasing that market towards the downside. We're seeing that pop. The pop is obviously something that we obviously know that the first move needs to correct, and we need to sort of see where that market wants to go to. And as you guys know, I generally like to put in that first feeler trade in terms of the market. Now remember, markets are extremely shook at this moment. If you guys see the sort of profile picture for today's thumbnail, it's that same Wall Street guy that stood in the markets, watched the markets fall, and just looked at the markets, right? He was literally just watching these markets tumble right in front of his eyes. So we obviously want to make sure we are paying attention to that, because we could see over the next couple of days pretty much anything is going to be allowed. Normally we would see open of the markets a straight run, and we've seen over the past couple of days, we've seen that rain, right? So we need to pay attention to that. We can't just trade it as we normally would. For those of you who've been with me for a while, you'll know that when we do the New York Stock Exchange move, there's certain prerequisites that I have, but once they're met, we let those trades run and they do what they've got to do. So in these days, we only put in a feeler trade, we allow the markets to show us what they want to do, and then we make a decision in terms of where we want to go. So US 30 this afternoon has come to support. Seems like it's going to hold support. Nasdaq has pushed through, but ultimately looks like it wants to recover. We're seeing a very similar thing on German 30. Now, I would love a topside move. You guys know my sentiment about that. And maybe what we will do for this is let's open this up really quickly for those of you who want a bigger long-term understanding of where we could potentially be going. And you also need to understand that we are sitting again, once again, at that 15-minute resistance level, right? So we got this little structure over here. And we're seeing that markets have played around, this is US 30 right now, at that level for quite a bit of time, right? And the fact that we've bounced off of it and rejected off of it multiple times, again, I would love a topside move. I'd love to see us break that 29,698, 29,700 flat level. And that's where we have our pending order set up from yesterday, because again, we break that and then we start to see the market come back to equilibrium. We start to see, these levels come back to what we've seen from past data, right? And that is exactly what I'm looking for long term. I've got zero qualms. I've got zero objection with scalping a market as and when the data provides it to be true. No issues with that. But again, right, when we see past data that ties up, there's those moments in time where we see these massive moves. And I would love, should we get that break, to be in a long-term position on the indices markets, right? Managing risk, managing stop losses and trailings correctly. And that could be a trade that runs for weeks, if not months, if not years. We need to understand that. We could be talking 20, 30, 40, 50, 100,000 pips to the north side based on past data. And that's exactly what I'm excited about personally as a trader, and what I want to make sure that if we see happen, that we're able to capitalize on. Now, because we're seeing fairly choppy markets, what I'll go ahead and do is, if we see markets essentially push through this trailing, I'll literally go ahead, and I'm not going to be greedy, and I'm literally going to look for a 1,000 point trailing. And again, 1,000 points is equivalent at the moment to about 100 pips. So if we see that move through, right, I'll cover my original position, but then I will also go ahead and then start adding positions towards the downside. Again, as I explained yesterday, that first feeler trade, if it moves into profit, I secure that profit and I utilize that profit in order to open up more trades. So I'm not placing my account under strain or opening up essentially, adding risk to my account balance, but I'm using banked profit to open up additional trades. And that's part of a money management system that everybody has to develop over time, and something that we'll be teaching in the intermediate into the pro series as we release more content in the coming weeks and coming months. And you definitely want to stand by and be a part of that. Now, really quickly, just looking at the rest of the markets, I can already see that my stop loss has moved into profit. But remember, I've only got a 100 point trailing. That is already closed up that 100 points at entry there, just below entry. There might be a few pips banked there, but we're not seeing a ton of pressure to the downside. So that trade essentially is closed out with zero stop loss there. We've obviously closed out at entry, but we're not seeing a ton of momentum. Let's have a look at what the other markets are busy showing us. Same thing on Nasdaq, same thing on German 30. We're just hovering around that support level. Now that we have a bit of a better indication of where this market's going, right, we can also see that Nasdaq support was not broken. And again, that is where, from a price action perspective, you want more data. The more data points you have, the better of a market structure you can look at. 1 or 2 touches, it's going to be shaky, it's going to be slightly dodgy, but obviously the more data points you have, the better of a market structure you can draw on your side. So let's have a look. Again, guys, I really want to see a north side break, over that 29,700 mark on the dollar index or on the Dow Jones. But again, we will obviously trade what the markets give us, right? We need to obviously look at the data that they're giving us and trade that. Let's quickly have a look if our handy RSI is giving us any sneak peek into a market move that we can't necessarily see from a price action perspective. So the only thing that I can obviously see here is the previous break that we obviously got, because we have data there to show us, right? RSI gave us that precursor on this bull move that we could see a breakdown, push back up and move. However, I'm interested in obviously looking for some sort of long position. Now, we are getting that divergence, right? Lower lows on a price action perspective. We're not getting lower lows on the RSI. So it's definitely showing us we could see some topside move, but I would then expect to see some sort of newer structure towards the ranging side, or I'd want to see some sort of break right over there, right? So should we push past here, that is where I will look then for a long position. in that particular case. My trailing stop has protected me from this short move, closed out at entry, nice quick trade in terms of open close, risk management done and dusted. But we would want to see some sort of breaks here to give us that confirmation for a long or for a short. Now we've seen this, and this past week has probably been, I'd say the past week has been the most uneventful New York Stock Exchange opens. And again, that further tells me that the heartbeat and the pulse of the market is off, right? We generally see very specific moves. We see markets are intentional and markets are direct about their approach in terms of what is happening. So when we see the heartbeat or the pulse is wrong, right, we can see that markets are in conflict with where they know they need to be and where they currently are, right? We're not seeing that correlation. We're not seeing that health of the market the way we generally see it in the past. And again, that's just because the greater signs are off here on this one. Okay, let's hold and see. Now, again, if we start to see a push below on the downside, specifically looking on US 30, I would also expect and look for and wait for that break on Nasdaq. I would also expect and wait for that break looking at German 30 on the right hand side. So I would want to see simultaneous breaks across the board, and I'm happy to re-enter to the downside and chase that trade towards the downside. Again, trading stopped me from being in a 800 pip floating negative, specifically sitting on US 30. But again, we want to wait for that confirmation in terms of where that's going to come. We very might well get that data at 4 o'clock and trade that data. Remember, we have that housing data that is coming out that we do potentially want to pay attention to, and that is going to be happening in a little bit, in 17 minutes from now, and that's going to be sitting at 4 o'clock on the dot. So if the data comes out and I don't see it, please make sure you comment and let me know, because obviously I can get carried away when it comes to the charts and just watching the data and watching the markets. So let's have a look. I do believe we figured out the load shedding issue. We believe that one of the guys that are doing maintenance outside are essentially connecting over into the studio. So once our supply unit kicked in and obviously looks after the studio, it was then also powering the guys that are essentially doing work on the other side. So we've sorted that issue out. So we should be fine for past the 4 o'clock mark. So we should be good to go. Just reading the comments really quickly. And Sumi Aloy, hello from Gianni. This is now my favorite TV. Greetings from Bloemfontein. Hein, how are you doing? Thank you, my dear brother. And Sumi Matthews, Heinrich, and Sumi Richard. Let's go, Tobias. This is not one of those cliche micro trading things, guiding us into the real thing. My analysis is getting sharp and intuitive. Thank you, Tobias. Appreciate that. Listen, guys, that's the reality about real live trading, right? The reason people don't do it is you need to have experience in the markets, right? A strategy that works last week, right, is not a strategy that's going to work next week. And we see this across the board. We see this with regards to robots. We see this with regards to specific trading strategies. You need to be able to read the market and adapt it. And that is what I've taught to many people over the past couple of years, is how to read the market like a language, right? The data's there. We can see what the market's doing. We can see what the market's telling us. And when we look at the market, right, we need to understand this is the real market. What you're seeing behind me, this tick data, that's the market. That's price coming in and out. Candlesticks and charts and price action are our way of taking that data, those millions and millions of bits of data around the world that are being compressed into one place, and understanding it and converting it into a language that we can read, right? That is all the market is. That when we talk about analysis, interpretation, that is what we're doing. We're understanding how to read what the market's doing to better understand where the market is potentially going. And that's all it's about. And you need to be in a position as a trader, not only to be skilled, but to put the time in, right? Many of you may be starting your trading journey right now, right? In the hardest times to trade the market. There's never been a better time. People start into, amazing seasons where everything's flowing, correlation is great, everything's working out perfectly. But the seconds the market goes into turmoil, they're completely lost. They're disfigured. They're blowing accounts. Nothing seems right. They spiral into depression. There's never been a better time to get into the markets than right now. Because why? Markets are crazy. If you can put the time and effort in to understand what's going on now and develop a system that works for you in this season, man, you are going to be thriving in the next season because you're learning under the hardest economic events that you can potentially choose to learn from. And the next time this happens, you know, right? You can feel it, you can sense it. You're right, all right, markets aren't moving correctly. We need to take a slightly different approach. And that is what it is all about. Now, we're still keeping these charts on because the second I know I turn these charts off, or the second I know I end this live stream, markets end up popping off and then I end up trading them myself. And we don't get to do that together. So we are going to be just holding on to this one for a little bit longer. We are going to ideally wait specifically for that housing data. But I think until we get that, let's just go through the comments and see what is happening in our community and what you guys are busy saying. Heinz saying Fibonacci has been drilled into my head and into my brain. Guys, price action and Fibonacci is king. You cannot get around it. That is what it is all about. Tobias, thank you so much for your comments. Guys, again, as always, there's somebody out there that you know yourself that needs this information, right? That is stuck in markets or wanting to get into markets, or somebody that you know that needs to make a change, diversify, whatever it may be doing, whatever they may be currently doing, they need to have a look at something alternative. If you know that there's somebody out there, go ahead, share this live broadcast with them. They can go and watch it after the fact. But ultimately, if it makes sense to them, it gives them an opportunity to get started in something that could potentially change their lives. Okay, beautiful. So we are going to jump and have a look at what markets are still doing. And we're going to, I think, switch it up a gear and just have a look at what other markets are up to this afternoon. Quickly paying attention to USD ZAR really quickly. Let's have a look at what she is busy doing. Ooh, okay. Right, this is very interesting, right? I'm really liking this. Let's just give, all right. So dollar index, we can see is losing a little bit of value, right? This afternoon, this is the daily time frame. So we're seeing the dollar index do that little bit of a pullback, which is the start of what we want to see or what we expect to see. Again, I don't want to see any one currency fall, right? I'm not wishing bad on the dollar, anything like that, but I'm looking for signs that the market is going back into equilibrium and going back to a place where we can treat it as we normally do. Now, looking at USD ZAR, I think this is really important because we looked at that 78.6 Fibonacci bounce, right? We're seeing the dollar lose value, and already yesterday we set up that pending order for a break or a downside move on USD ZAR. Now, I do think we do need to take into account some of this new data that we have in terms of this market structure, and it may very well be something along that nature, but it also very well may be something along that level over there, right? So again, we have a couple options available to us today in terms of how we could potentially deal with this and or trade with this. But I think what I'm going to do just in the background, I'm just going to open up and make sure I have eyes on US30 down below, just to make sure we don't miss anything this afternoon. Okay, there we go. Beautiful. So people ask, sometimes why I have so many screens, and that is for that reason, right? To be able to A, see that you guys are fine, B, broadcast, C, look at the charts, and D, ultimately make sure we don't miss a trade, right? So if you want to know why, we need so many screens, it's for that exact reason. Okay. Let's give it a quick look. So USD ZAR, I think, is going to be something we can potentially take quite a bit of advantage of. But again, I'm looking for long positions on ZAR, but that dollar weakness could be astronomical, right? So if we see massive dollar weakness, if we see that housing data comes in extremely poor, then obviously we want to pay attention to that. That is coming up in exactly 9 minutes and 8 seconds from now. So we are going to hold on for that. If we see, for some reason, by some miracle, good dollar data, that would give us the perfect storm, perfect buy opportunity for South African Rand, perfect sell opportunity for indices, and potentially we might have to look for a short on commodities. So we will wait for that. We'll wait for the data to come out, and we can then take advantage of that together in that session as we deal with that live. Okay, so what I'm going to do is I'm just going to set up an alert here really quickly on USD-ZAR. I'm going to set up alerts above and below that 78.6. In the event, in the next couple minutes, we start to get movements that we don't have a look at. Richard saying USD is the one to have a look at, guys. Everything right now is hinging on the dollar, right? Everything right now is hinging on the dollar. And I think that's definitely where we want to pay the most attention to across the board. And in terms of all of the markets, I think the dollar is going to be item we more than likely are going to keep our focus on, specifically over the next couple days. That is kind of where we want to be more than anything else. And I think it's going to continue to be the trend. I think it's going to continue to be something that we need to pay a lot more attention to, because I think the dollar is going to drive and set the tone for the markets. We were looking at the last interest rate that we ended up getting last week. That interest rate announcement should have been the tone that sets, should have been the announcement that sets the tone for the next quarter, right? Again, based on past data, rising interest rates, stock market recoveries, dollar falls in value, indices recover, as well as commodities. So that should have been the tone, but we're seeing an imbalance, right? So we're waiting for that tone to be restored so that we can obviously see and set that tone for the next quarter, at least for the next 2 months, leading up into January of 2023 is where we want to be. Okay, so I'm going to hold on USD-ZAR for a second, and we're going to obviously just keep paying a little bit more attention to indices this afternoon. We are getting that market structure that is giving us a likelihood we could see a pop. So we very well could see a perfect storm situation this afternoon, right? Again, should we then see that dollar weakness on the housing data, this could be the catalyst to pop indices through the roof that we could potentially want to see. Again, we're going to have to look at how big that knock-on effect is on the South African rand and whether that would be enough to break 78.6. We will then look for the short as we were looking for on Monday. But again, that's going to come out the next couple minutes. So I'm pretty happy to hold out and have a look and make sure if we get that data, how we deal with that. We will obviously deal with that together, as always. Just adjusting things here really quickly. When we deal and have these essential special edition shows, obviously we pretty much have to customize a lot of the timelines, a lot of the movements. So you see me moving things around. That's all I'm doing. It's just making it a little bit better, every single one of you. Okay, so let's give it a quick hold. What I'm going to do really quickly, let's do a 5-minute interval. Well, let's do 3 minutes. We're going to do a quick 3-minute intermission, grab some water, stretch the legs, get the brain functioning and flowing, get some new blood up in there. And what we will do is we will then move into and have a look at what data we get coming out in the next 5 minutes. So let's do a 3-minute interval, and I will see you guys then after 3 minutes, and we will deal with this one together. I'm going to change some batteries and make sure we're fresh to get through that 4 o'clock mark in the next couple of minutes. So I'll see you guys shortly. Okay, let's get it. Right, so we're not seeing a lot of movement, but we are seeing a potential break as we speak. So let's quickly give it a look. What is NAS and these currency setups trying to do? And again, we are very, very close, within a minute of that high impact or high volatility news. Now, for those of you who know, right, you don't want to be caught in a trade without knowing what that data is going to be. And a lot of times people will purposefully stay away from trading in terms of those high volatility fundamental event data. So we are obviously going to pay attention to that. We are going to get that data in about 2 minutes from now. So we're obviously going to pay attention to that. But just in terms of what do we do in certain cases, let's just go over the data in terms of what we could expect. So again, pending home sales, if we see an expectation that is negative, right, more than expected. So we see a negative 1.6, 1.8, negative 2% in terms of those pending home sales. It could be extremely negative for the dollar and help us with an indices long position. Again, if expectations are beat and we see a negative 1% or even a positive growth figure, that'll be good for the dollar and not good for indices. So we will then look at that. Again, this will have a knock-on effect for something like ZAR. It'll have a knock-on effect for commodities. So we will deal with that as and when that comes out. That's going to come out in the next couple seconds. We have a couple seconds to prepare for that. Let's go back to markets really quickly. Again, it would be great this afternoon if we see that perfect storm situation. German 30 kind of pretty happy to range to the top side. It's doing its little market move there. But again, we are a few seconds out, about 30, 40 seconds. So we are going to wait for that and see what that direction is and how we trade that together. So let's give it a look and see what she wants to do. If we look in the comments, Mackenzie's saying, beat on point as always, guys. You've got to have the music. When I'm trading alone, a lot of these lights go off, and I can give you, I'll give you towards the end of this a quick share on what that looks like. I'll turn off the lights in the studio and give you a side view of what that looks like. But ultimately, music is on, get my zone set, and that's the ideal trading environment for me. I have to have music, need to get into my zone. That's part of my trading strategy. People believe that trading strategies are just about buying or selling. It's not. It's about your mindset, it's about your risk management, it's about your environment, it's about where you are from a stress perspective. For those of you who know, trading when you're extremely stressed, not the greatest thing on earth, right? Okay, we're starting to see those moves to the top side on US 30, right? Let's pay attention to that really quickly. But we are going to have a look at what that data says. Okay, so it's negative. So it's going to support a US 30 buy, and that's where we're going to go, and we're going to follow that trade to the top side. So we're going to follow that buy, and that could be the catalyst that we're looking for, that negative dollar catalyst that we're looking for to essentially break the back of the markets and essentially send us north side. So let's quickly have a look at what knock-on effects are. We are going to leave this one just to simmer for a little bit, but ultimately we want to have a look at what are going to be the bigger knock-on effects across the market. So let's leave this one just to do its thing and see what data we get out of that. Let's quickly have a look at how ZAR is reacting. This might be a catalyst to push ZAR into a sell formation, but we obviously want to wait and see what that data does and how the markets react to that information. Negative home sales, new home sales should be negative for the dollar. Let's just go into a deeper look closer on the 5-minute charts, what the dollar wants to do. We can certainly see that trend to the downside, but I just want to see that data, and I want to see that data trickle in to some price action on the downside. And that'll help me and give you confidence to add to that position of a indice break towards the top. Again, this very well could be a catalyst to further that market move. Ultimately, remember, markets are fearful that if the dollar keeps performing well, that the Fed is going to continue raising interest rates and essentially push the US economy into a recession, right? So we want to have a look at how that translates over the next hour and over the next bit from a price action perspective. Now, let's have a look here. US 30 is potentially, let's have a look here. Okay, so we got that temporary break, but we're seeing markets do a little bit of a pullback here. Let's see, we could be getting that false move. Let's see how that plays out. Let's wait. Right, NAS reacting temporarily negatively. US30 acting temporarily negatively. But again, I think this is temporary. We obviously want to see where that balances out. Remember, we have two things happening. We have the start of 4 o'clock where we see some breakouts, but we also have that data coming through. So again, high volatility news, you always add risk to your trade by trading those bigger items. And obviously it also depends how the market interprets this data. It was already expected to be negative. We got -2, so that's going to be obviously something the market needs to pay attention to. Let's quickly dive into this and just see how bad this is. And we're just going to have a look at the past year, right, in terms of that data. So we've seen, massive declines, even as far as what looks like the most, about -8.9%. So a -2 is bad, but it's not the worst thing we've seen. And if anything, of the negatives, it's not the most negative by a long shot. So it's bad for the dollar, but whether this will translate into breaking the back of the dollar, we obviously have to see how that translates from a price action perspective. Again, if we see markets settle and we see another break, I'm very happy to chase this towards the top side. Again, feeler trades are there for that exact reason. We want one trade to run into profit and utilize that profit to open up existing trades in one direction or another. I see a lot of people pick a direction and leverage the whole account. Guys, you won't last through a trading week in that way. You have to be patient. When the markets are acting out of sync or out of normality, you need to be patient. And it's probably one of the hardest things to master, for the reason being that when you're seeing imbalance, you're seeing markets not do what you think they should do or what they normally do, it adds to frustration. And a lot of people do what's called revenge trading. If you've done that before, let me know in the comments down below if you guys have done that before. But when markets are acting out of balance and you place a trade, doesn't go your way, people try and revenge trade that market, right? Add, double up, triple up their positions to make back that potential loss or whatever it is that they lost, right? Remember, markets are amazing at spotting revenge trading. Markets are amazing at looking at those emotional sort of trades and making sure that they take those profits. That's what it is all about. Remember, Wall Street invests billions of dollars to build algorithms to understand how humans think and how humans trade, and you need to be aware of that in the best of times. Okay, let's continue to hold and see what she wants to do. Yeah, I'd still be very keen for a long position. And RSI is pretty much giving us the hint that that long could be coming. Initially, in most of the cases, when we get a break in the RSI, we first get that retest, which can essentially push. So if we're looking for a short and RSI breaks, we can get a retest that pushes slightly higher, but then ultimately price falling. And we're seeing a very similar thing this afternoon. A slight pop towards the top side, a retest, which means a lower price. But then ultimately, if we see that trend continue to the top side, that is what we would like. That's what I would like to chase this afternoon. Again, and that's mostly linked to the bias, right? As soon as you can scalp in the direction of the bigger trend, that is where a small scalping position could turn to a day trade, which could turn to a swing trade. And that's ultimately, the ideal world. It doesn't always work out that way in the markets, as you guys know fairly well yourselves. Let's watch it, see what she does. Yeah, Richard, right. Don't bring emotions to trading. Emotions and trading do not work well together. They tend not to work hand in hand. Exactly the opposite in most of the cases, right? Yeah. Let's just quickly do some trend analysis on the past New York Stock Exchange sessions. And this will sometimes help when we're seeing that indecision, just to look for some of the patterns and the items that we generally see, right? And when we obviously start to see some of those bigger market breaks. So if we have a look at, as an example, yesterday, the 27th, we sat in a range, a considerable range, right? For most of the trading afternoon, we saw markets make a decision at 4, right? We see that markets then ultimately at 5 o'clock reversed on that decision, but we ultimately see the break that ran into the evenings happened yesterday afternoon at about 20 past 5 in the afternoon, right? If you're dealing with local time. Going back to Monday, let's have a look if we see a very similar thing. So Monday, we see markets ranged with indecision, 4 o'clock, made a decision at 4, and then ultimately broke structure, right, just after 5. So we're starting to see that when we have these indecision days, right, when we have these non-directional moves in the markets, we're seeing that in the past 2-3 trading days, and this doesn't build and justify a trend, but when you're seeing, irregularity, you need to start looking for trend. We're starting to see that at about 20, just after 5 in the afternoons, we're seeing then that sustained move take place over the balance of the afternoon, right? So we need to just pay attention to that. Let's just see if that further translates. I'm just taking a look back just to make sure we don't miss anything. Let's just see if that further translates into last week. And what I want to just do is I want to have a look at Friday. Okay, Friday's market open. Okay, so there's definitely something we need to consider here quite seriously, is that since the interest rate announcement, we're seeing that those irregular moves, we're getting volume, right? New York Stock Exchange, we can clearly see that. But we're also seeing that real trends and structure breaks are only happening, right? If we have a look at this move over here, right? Pretty much a range, not great to trade, not the best trading conditions, but we're seeing these breaks start to happen at around about 20 to 5:30 in the afternoons, right? So you guys might want to pay attention to that this afternoon. I might just stay, and not necessarily in a live session, but I might stay live trading until around about the same time. So just after 5 o'clock, I'm going to look at the markets again and see, do we break structure? And if that is the case, then we need to adapt strategy over the next week to accommodate all those breaks in structure. Thank you, Peter Free. Thank you for your comments there. So we do want to pay then attention a little bit to, do we get that 500 period SMA break at 20 past 5? If that is the case, and we're seeing that being supported by past data, again, these shows are about you guys. These shows are for you guys. It's for traders by traders. So we can shift and adjust our strategies as well as our show times to accommodate those needs if we see them, right? Just having a look again, right? I just want to have a look here if we're seeing the same thing on the 22nd, because remember, interest rate announcements essentially threw everything on its head, right? Past data, right? This would be a normal New York Stock Exchange open. This was the 22nd, and I do believe this is around about the time and just after we got that interest rate data, and this is when markets really started to shift the way that they worked. But this is New York Stock Exchange, 4:30, we got some volatility, and then ultimately moved the direction that we generally see. That's normal. We see that. That's how we expect the markets to move. Let's go back a previous day. So the 21st, we get a move, and then we see only at around about 5, we get a sustained move to the downside. It's a little bit disfigured because obviously we're seeing that New York Stock Exchange, the interest rate decision happened the previous night. Interest rate decision happened, markets fell. We bought off the interest rate decision. For those of you who remember, we traded that live, and that did a 5,000, 6,000 pip move to the top side. Since then, balance has been out of sync. So we do need to start to look for how do we catch that balance once again. And we're certainly seeing that this week. We're only seeing those real market trajectories and real market structures start to flow from that 20 past 5 in the afternoon. Again, if you're looking at your charts, if you're using the best broker in the country being Globex 360, then your charts would represent a 1 hour time frame difference. So we were looking and focusing on the 1620 to 1630 time frame, or 1620, 1630 move, right? For those of you who want to go ahead and look at this on your side from a opportunity standpoint. Yeah, so we might very well end up getting that. Again, we've got a bit of a range this afternoon. Not ideal to trade a range. We want to grab things where they run. We can use trailing stops to put positions into profit, and then ultimately, capitalize on a long-term move. So what I would suggest, right, is let's do this, right? From the end of this week, we are going to be sending out emails for those of you who have your live accounts. At the moment, this is a free public service at this point in time, but I would like to develop very specific trading sessions with those of you who have live accounts. We are developing different packages and different account types that give you certain benefits just by being a client of Globex 360. But ultimately, I'm looking to have only live accounts within an area that we can do these little sessions together, find these opportunities and trade them live together without just being a free public service. So once that's developed, and once we've got that email out to you this week and you have a live account, so you're in the Globex 360 live account group, we can obviously do more things like this. And again, if this trend persists, we may shift that trading schedule to make sure that we can accommodate for these volatility moves, provided we see that data continue throughout the course of this week. So again, we'll adapt to fit what works for every single one of you in a better way. Absolutely, Richard, there's never been a better time to get back on the horse. You want to understand what's happening in the world, you want to understand what's happening in the markets, and you want to take advantage of that and capitalize on that. Now, in the break, I did see that, potentially we could see this pullback on USD ZAR. So I am in a buy position already on USD ZAR as a feeler trade. Again, should the market somehow, in some crazy world, in some crazy universe, look at decreasing new home sales as a positive thing for the dollar, and the dollar gains strength, again with imbalance, right? Anything is possible. Then it could mean USD ZAR could continue north side. But if the markets come to their senses and say, hey, less new homes are being sold, less money is being spent in the economy, not good for the dollar, then, again, we could see that break. However, I am in that feeler trade for that long position on USD ZAR. I'm going to hold that again because I know where USD ZAR is going long term. I've spoken about this in the past, and we could very well be seeing that 18, 19 rand to the dollar mark. Now, we are seeing this trend sort of play out in terms of the dollar index, and we obviously just want to make sure, does this continue trending lower? And if we are at this moment in time where the next push could happen, then definitely we want to be in a position to capitalize from an indices perspective. Again, we're seeing that scallop formation we've started to see over past days, where markets are losing momentum to the top side. We can see that loss in momentum on the dollar. Again, we are looking at a 5 minute, so it doesn't represent a whole bunch of data, but it certainly shows that short-term dollar could lose that value to the downside. Again, supporting a long on our indices, which is what I'm ideally looking for as a long-term trade. Okay, we're obviously seeing US30 trying to find support here, not necessarily getting it. I feel like we're a little bit past that zone, but again, we obviously have to wait to see what ends up happening. So this is what I would do for this afternoon, right? Is go ahead and just set up some alerts north and south. Again, as we've seen in the past, we're creating a symmetrical triangle formation. Markets are coming to some sort of decision or apex, and then we get that breakout. What I would do is set up some alerts north and south of current price. If that alert happens and it notifies you, you can deal with that accordingly, right, for a potential breakout. But what I'm going to do on my side is I'm going to set my alarms for 1 hour from now, and I'm going to be looking at what the markets do at 5:15 this afternoon all the way to around about 5:30. If we see that break in structure, I'll alert you on the group and I'll tell you that I'm seeing a break top side or south side, and then that is what you must use to essentially look at the markets and make a decision for yourself what it is you like to do. If we see that trend continue, we very well may shift to accommodate to jumping into those live sessions as and when the markets are most volatile. Again, that's the beauty, and that's what I love about live trading is, and specifically about when I want to live trade, is I want to trade when there's the most volatility, when there's the most movement and direction within the market to catch that live. So that's what I would do. Set your alarms for 20 past, 5:30 at the absolute latest. Have a look at, do we break structure, create that 500 period moving average for USDT, and have a look. What do we see at that time? If I see something on my side, I will let you know, and we will deal with that accordingly. But tomorrow morning, we do have the London Stock Exchange, the London Open that we will be dealing with live. In addition to that, guys, if you would like to share your trading journey, right? If you'd like to share, your journey in trading, what you've been through, what you've seen, what you've found, what you've encountered, please go ahead and let me know. You can pop that down in the comments below. If you've had the privilege of being with Globex 360, you've been a client, as I have for a long time, and you'd like to share your growth, your evolution as a trader, please let me know down in the comments below. I would love to set up time with you for an interview. If you are based in Gauteng, we're going to be looking at those clients first. Sit down with you, understand your journey. What have you been through? What have you seen in the markets, and how have you grown, and how have you evolved as a trader? If that really interests you, you're welcome to leave that down in the comments below, and I will make contact with you to take you through and see if you're a good candidate for that potential interview. Okay, beautiful. Outside of that, we're not seeing much else move in the markets. We will wait for that 20 past, 5:30 mark. I will inform you guys in the groups if I am seeing anything, but until I see you guys in the morning, all I have to say is remember to live and trade the Globex 360 way. It's a little bit later. Goodbye.